Friday, July 14th. As always, we've got Mark Yusko. I am filling in for Mike Ippolito. I'm Jack Farley, host of the Forward Guidance podcast. So I'm not going to, I don't know if I can fill Mike's shoes, but I'll do my best. Mark, great to have you here. And
No, thanks, Jack. And thanks for filling in. And I apologize. I'm kind of turning cockeyed here because I have a clogged tear duct, and so I'm feeling a little self-conscious about my eye. But I'll do my quick sock reveal. So I got the Bitcoin orange pants on,
wow.
and I have the Genesis block socks on today. So why do I have the Genesis block socks on today? Well, because I think everything goes back to the kind of origin story of Bitcoin, right? That it's because of where we are with the macro environment and the creation of money and all of that we need a sound money. And now you've got people like, I mean, I was on vacation for a couple of weeks and I was totally away and off the grid, but I did sneak a couple little things to listen to. And one of them was Larry Fink, right? Head of the largest asset manager in the world, basically saying that Bitcoin was a good place to protect your assets from devaluation in the currency. I mean, literally, like your head explodes when one of the most powerful people in our business go ahead and says, this is a big deal, right? And so that was one. The second is, while I was away, I was telling Mike this last week, I, for years, had talked about how the Medicis had formed the modern banking system. And part of that story was that they had borrowed, AKA stole, right? Picasso, who I got to see the Picasso Museum, which was very cool because we went to Spain and Portugal. And Picasso said famously, good artists borrow, great artists steal. And so the Medici stole this idea from some monks. But I actually never knew who those monks were. Well, I found out they were the members of the Knights Templar, the Templar Knights, in the Order of Christ in Portugal. So they are the people that actually invented fractional reserve banking and are at the root of kind of where we are today. And it goes back, and why did they do this? Well, it turns out they basically just held gold for these other knights that were going out on, missions. And it turns out some of them didn't come back. And so I'm like, oh, well, we have all this stuff, so maybe we could lend it out and charge some interest. And the golden rule, right? He who has the gold makes the rules, or he or she who has the gold makes the rules. And so they ended up with all this wealth. And that wealth is at the center of a whole bunch of stuff that's created this pyramid, the all-seeing eye, over the years. That's at the root of all of the issues that we sit and talk about today.
That's super cool. So at what point, so there's a surplus gold because, some knights went on a mission, they never came back. So we can lend their gold out. If, party A lends gold to party B and they literally, party B gets the gold physically and then returns it back with interest. I don't know if that's fractional reserve banking. What's the...
Oh, no. That was the point. They didn't actually lend it out physically. Yeah. They created money and credit, like IOUs, and again, I didn't go into all of these, but to your point, the gold stayed in the vaults of these Templar Knights, the Order of Christ. And it's really interesting. I never really knew this, but the Portuguese were the most powerful nation in the world, the world reserve currency for almost a century. And I didn't understand why. Well, now I do. And most of it had to do with their navy. Well, why did they have the most powerful navy? I used to say it's because they had the tallest trees. Well, that was part of it. Mostly it was because they had the money to build the best ships. And that, so anyway, if you look at all the pictures of those original Portuguese ships, they all had the white sail with the red cross, right? Which was the Order of Christ.
Hmm.
And so then I'm doing this tour down Spain and Portugal, and everywhere I look, every monument, every little like engraving in the street, there's the cross. Go to a castle, they have in their railings, they've got the cross. And so this money infiltrated the entire nation. And what people forget, and I didn't really think about, Spain and Portugal were the center of the universe, right? Because Spain took over from Portugal and was world reserve currency for another 75, 80 years after Portugal. So for about 150 years, that was the center of the universe. And Seville, Spain was literally the portal that created the New World, right? Queen Isabella said, here you go, Chris. Here's some ships. Go off and discover the
And
New
they were
World.
taking a lot of gold from South America, right?
Oh, and
Yeah.
brought it back. Well, and not only gold, but silver. And they actually
Mhm.
ended up crashing the silver market because they brought back so much.
And sometimes causing inflation, right?
Yes,
Yeah.
exactly. Exactly. But what I thought was really interesting, one, she was the first venture capitalist because she said, I want 20% of what you bring back, the carried interest, right? Which we all now pay hedge funds and private equity funds. So I thought that was pretty cool. And then I thought what was really interesting is in Seville, Spain, there's a building with every record of every voyage that went to the New World, both west to Americas and east, Vasco da Gama to India. And again, why did that happen? Why did Christopher go left and the other guys went right? Well, it's because spices. And most people have no comprehension. They said if you had a jar of cinnamon, it was worth your life. Like literally, if you were indebted to someone for your life, you could repay it with a jar of cinnamon.
That's how valuable it was.
Yeah. And so Spain became so valuable because Da Gama went to India and got all the spice route. And the gold and silver from the New World was important. But the thing that I thought was really cool, never thought about this. The horse, the cow, the pig, the chicken, not native to the Americas, only native to Europe. And potato and tomato, right? We think of potatoes as
no tomatoes in Italy.
No tomatoes in Italy.
That is,
and I'm like, no, come on. And they're like, Mark, that was trade. And it's just one, it's 1,000 years of history, actually 2,000 years. We saw in Segovia a Roman aqueduct, 2,000 feet tall, no mortar, no concrete, just stone on stone with these beautiful arches, 200 feet in the air. It's been standing for 2,000 years. We can't build stadiums that last 50 years. My office building, right? It's 15 years old, leaks every time it rains. And these guys built structures that last 2,000 years. It was incredible.
This is somewhat farcical, but do you think it's that like because the financial world invented depreciation, suddenly that's why buildings start to depreciate? It's like, oh, why are the pyramids still there? Because they hadn't invented depreciation yet.
I love it. No, and Jack, what I love about that is, again, before it was unpopular to talk about or politically incorrect to talk about Bill Cosby. He had this record album. I know you don't know what that is, but this black disc that he spun around when I was growing up. And he had this thing where he talked about this kid. He said this kid could ride his bike anywhere. Over the top of the swing set, on the top of fence. He could do 360, 6-inch off there, and never fell. First time he fell, when someone explained to him about gravity. And to your point, things didn't wear out until we invented depreciation and created an incentive to not have things. Or look, It's like you can build a car that doesn't need maintenance every few thousand miles.
Yeah, well, it's one of those conspiracy theories that definitely has some truth to it. Forced obsolescence, like the company that makes your laundry washing machine, it makes it so that you have to buy another one in 5 years.
Of course.
Yeah.
I mean, 100%.
Let's move on to crypto. So Bitcoin has been cooking for the past month.
Oh,
Well,
so
more
good.
than that, and
So good.
I'm sure it's been responding to your orange socks. And some of that is on the news anticipation that the BlackRock's filing for its ETF for
Yeah.
a spot Bitcoin ETF will be approved. You referenced the CEO of BlackRock, one of the largest, probably the largest asset management company in the
Yep.
world, who they actually reported earnings today. And so in 2018, Larry Fink's when he asked about crypto, he said, I'm paraphrasing, the only thing it's good for is money laundering. As late as maybe 2022, I think it was actually at the same conference where SBF was with Andrew Ross Sorkin. Andrew Ross Sorkin asked him about crypto, and he really downplays, "Oh, crypto. I mean, it's a small little thing, and we may launch an ITF. It's not." But now he's changed his tune and is speaking like a true believer. So my question is, as someone who has been on the inside of the asset management industry for a very long time, how much when a leader of an organization, makes a comment about a certain asset class and they're trying to do business in that asset class, should we even take them seriously? Was he as bearish, in 2017? Is he bullish now? I mean, is he just kind of singing whatever tune necessary to sort of promote the product?
Well, great question. So again, I don't want to speak for him, but I will. Absolutely not. He was not as bearish as he came across, right? Nor was Jamie Dimon, nor Warren Buffett for that matter, right? Warren Buffett says it's like rat poison squared.
Yeah.
Like, how do you know what rat poison tastes like unless you're a rat? Actually, I'm just kidding around. And Charlie Munger one upped him and said, trading in Bitcoin is like trading in newly harvested dead baby brains.
Yeah.
I'm like, Charlie, seriously, dude? And Jamie Dimon, it's a fraud, and yet he's got a whole team building, JP Morgan coin. Why? Why do they say this? Well, two reasons. One, you can judge the quality of the idea by the quality of its detractors. If people you and I and people who are listening to this don't really care about or know about, don't like an idea, who cares? Right? Probably not a very good idea. If people that we respect and admire and actually look up to dislike an idea, it's a really good freaking idea. And so that's the first thing. The second thing is, and I'll misquote this, but the capacity for someone to understand something and believe in it is inversely proportional to how much their paycheck is dependent on them not believing it and accepting it. And so if you're the largest asset manager in the world and or the largest bank in the world, and along comes this technology, back to my socks, and look, there's a reason the first image on the Bitcoin blockchain is the London Times chancer on the verge of the second bailout for banks. That's not an accident, right? It's not an accident that January 3rd, 2000,
9.
2009, thank you.
Yeah.
January 3rd, 2009, that's not an accident, right? It's not like it was invented that morning. Satoshi woke up and finished typing, and no, there was a reason that this was all released in the middle of the global financial crisis and the banking crisis. It's because this technology makes the 800-year run of the trust industry superfluous, right? We went from a system where we needed trust. And I use the very simple example, and people are tired of hearing it, but it makes sense. Like, if I lent you money, I wrote down in my ledger originally that, Jack owes me $100 and you come back to pay me back. I'm an unscrupulous guy. I've changed the number to 200. And you're like, no, I only owe you 100. And but Jack, this is the ledger, one ledger. So the Medicis came along and said, no, there should be two ledgers. Jack, you keep a ledger. Mark, you keep a ledger. But here's the problem. I'm an unscrupulous guy. And the Medicis, they're inventive. So I say to them, I'm going to change my number to 200 and I'll give you half. So you come back to pay me the 100. I say, no, you owe me 200. And you're like, but Medici's. And they're like, Jack, you must have written down the wrong number. It just looks like you wrote down the wrong number. It was totally corruptible, that system. And we know the system's corruptible. The banks, the global banks, have paid fines equal to an amount larger than the market cap of Bitcoin.
And those fines probably...
That's not the malfeasance. Yeah. The malfeasance is orders of magnitude bigger than that. Like we know last year, JP Morgan got fined $960 million, almost $1 billion, for spoofing the price of gold. Well, why would they be willing to pay $1 billion fine? They're like, because we made $20 billion. It's like the cost of doing business. Awesome. We're just going to keep spoofing because you're not going to stop us by charging us, 5%. And so it's a long-winded way of saying Larry Fink was doing what he and everyone in financial services had to do.
Well, trash a product that you don't have any business in. But now that he's going to have a business in, he's suddenly
you
found
were being
religion.
disrupted. And here's the thing. Look, everyone knows I was a big investor in and it's not me, it's we. We, it's like Maverick and Goose, we had a big investment in BlockFi. And everybody's like, oh, that was so stupid. I'm like, are you joking? They were on their way to becoming the new JP Morgan. People were moving money out of fiat in a ZERP world, moving it in digital assets, getting paid interest. Okay. They deposit the assets. They were lending the assets. It's a beautiful business. So what happened? When they took $1 billion out of the banking system, who cares? We don't care. You take 10 billion out of the banking system, who cares? You take 100 billion across Voyager, Celsius, BlockFi, now we got a fucking problem. And what happened? The regulators show up. What are you guys doing? We don't really like what you're doing. You violated the law. What law? That's not important. You violated the law. Well, tell me what law I violated. The law I said. But you didn't say. You actually said the opposite. Well, that was then. Now I'm saying this is the law. Okay. I mean, that's like playing, football and you get 10 yards and they say, no, I'm sorry, it's 20. All right. First down is 20 yards. Mm-hmm. So my point is, I believe, just my belief, just one guy, that those big institutions, of which BlackRock happens to be one, may have had a role in getting some of these state and national regulators to clamp down on this upstart. Very similar to, I don't know if you know the story of the Knickerbocker Trust. Mm-hmm. The Knickerbocker Trust, right, was this, trust company, and they were taking business away from JP Morgan. And JP Morgan famously quipped, I like a little competition. But when they got too big, as the story goes, he personally spread rumors that they were insolvent. And we've all seen the picture of the guys in their hats and the women in their dresses and their umbrellas running, the little run on the bank, like It's a Wonderful Life. And he put them out of business. And then guess who got to buy the asset? JP Morgan. That's funny how that works.
No. The Knickerbocker Trust. I thought you were thinking the First Republic, was bought.
Oh no, this is back in 1907.
Yeah.
Okay, we can go down Silicon Valley Bank too, but I'm going all the way back to 1907.
Yeah,
when this happened, and the trust law. Here's the crazy part: the trust law that allowed JP Morgan to buy Knickerbocker Trust is the same law that FTX was using to try to get Celsius, Voyager, and BlockFi. Well, wait a minute. Who's an expert on trust law? Sam's dad. That's kind of a funny thing. That's like his specialty. So look, I've said for a long time, like over a year ago on this show, that none of these ETFs were going to get approved. And look, I have money. I'm invested in Bitwise. I'm invested in Amun. I'm rooting for 21 shares. I'm rooting for Bitwise.
To get a spot ETF.
Yeah, to get a spot ETF. And I was like, none of them are going to get approved. The only one that will get approved is BlackRock. And people are like, oh, that's ridiculous. here we are. And now everybody's saying, oh, but they're not first in line. I don't care. They are going to be the ones that get approved. And if that means they have to disapprove 21 shares, even though it's the same application, basically, it's not exactly the same. I think, again, I'm entitled to my personal opinion. I think they're going to do it. And, others are saying, well, they have to approve 21 shares if they want to approve BlackRock. No, they don't. They don't. Technically, they are first in the queue, but they can do what they always have done, is just let it expire and then approve the next one. So we'll see what happens. But I'm still sticking with BlackRock will get approved. They will take the market share. And why is that important? Well, it's important because if you believe, as I do, that everything of the last 2 years was not an accident, that it was an intentional set of acts to disrupt the disruptors. As I said, we're in phase 3. Phase 1, the Gandhi quote, first they ignored it. 2009 to 15, no one cared about crypto. No one cared in Washington, D.C. No one cared in New York City. No one cared. No. I mean, Jamie might have heard it from his daughter. Hey, Dad, this stuff's cool. He's like, whatever, go away. And it's a bunch of nerds and geeks playing with their magic internet money.
Right. So, okay. So Larry Fink sort of trashing crypto and Bitcoin before BlackRock, his company, applied for an ETF. You think, he had an interest there. What about now that he is speaking about the virtues of crypto, about it's going to replace all other currencies, it's a hedge? I mean, is he just talking his book there?
Profit maximization, right? He wants the flows into his ETF to be massive, right? So he can collect the fees. But there's a more sinister, right? We have to go to Sinister Saturday since this airs on Saturday, and Mike always hates that, but I like the Sinister Saturday.
Mike hates Sinister Saturday. That's funny.
Yeah, and the sinister part for me is CBDCs, right? I think all of this, everything from Silicon Valley Bank to Signature to First Republic, all of it, I believe, is to foment fear and distrust of the banking system, concentrate the assets in a very small number of institutions, and turn the switch to CBDC and create a surveillance state and programmable money. And all you got to do is watch the minute 47 of Augustin Karsten's, Mr. Kingpin.
What's that?
And pardon?
What's minute 47?
So Augustin Karsten's is the head of the BIS. And he's this big giant guy. I used to call him Jabba the Hutt, but he looks like Kingpin. And he has this minute 47 clip where he describes why, of course, they should be in charge of our money. And that, yes, we should be able to control if you can spend it. Like if you don't spend it by Friday, it goes away. Like if we deem that Target is a superior company to Walmart, your money won't work at Walmart.
Yeah, or we need to have economic growth of 8%. Hey, Mark, you're not spending enough money. You're saving too much.
Exactly.
Yeah. So there have been some papers from the BIS, and he said that, but I've seen some papers about CBDC. So I think you're right on the intent there. And then obviously, if the Federal Reserve did raise interest rates, and those two factors you said, distrust in the banking system, and then the consolidation to larger banks. I mean, definitely that second one is objectively true. But I don't think that it was the intent of the Federal. I think I take them at their word that they're fighting inflation. That's probably so I think we agree largely on the facts. It's just
yeah. See, I guess my point is we don't have inflation, and there's an argument in the debate, and others would just. I don't think we've had any inflation. We've had currency devaluation. We've had the greatest currency devaluation in the history of currency devaluations, and it was, I believe, again, intentional, under the cover of lockdowns, which I believe were part of the plan to create an environment where the MMT nonsense, the cult of Kelton, as I refer to it, could prosper. I mean, look, we created 50 And one of the things you appreciate when you go to Europe is
Hmm.
we're just like toddlers in the United States, right? 246 years of, or 47 years of a
Right.
republic. It's just not, it's, you know, the Moors were in the Iberian Peninsula for 800 years and they're gone, right? I mean, but they were in charge for 800 years. So they've been around a long time. But for 246 of the 245 of the 247 years of the US Republic, we created half the money. And then in 2 years, we created the second half of the money. We literally, out of thin air, created half of all the money that's ever been created. And I don't believe that was unintentional. I believe it was absolutely intentional. It's the only way out. When you're an empire and you become overly indebted, you have four choices. You can pay back. Can't do that. Okay. Even if you taxed all the wealth, forget income, taxed all the wealth, you can't pay back the debt. You can restructure it, but someone's got to take the other side. No one's going to take a worse deal. You can default on it. Whoa, can't do that because then you get kicked out of office.
Hmm.
So you devalue it, deflate it, or inflate
But
it.
is it, yeah, inflate. So that is inflation. So why did you
Well,
say?
but see, again, no, it's semantics.
Hmm.
To me, devaluation is different than inflation. Inflation is when prices rise because demand exceeds supply. If there are 1,000 cars and there's demand for 1,200 cars, the price will rise. That to me is inflation. Okay. If I print $1 million and I devalue the currency by 50%, to me, that's currency devaluation. Now,
But you create a lot of demand because there's more money.
yeah, one could argue it's the same,
Yeah.
it's the distinction without a difference.
Hmm.
And that's fine. But and again, I've been debating this with Mike for the last year, saying this spike in inflation, it's gone, right? By the end of this year, we'll be back to deflation. There will be no talk of inflation. We've already seen it with the commodities, and now we're going to see it in services. And then the sticky part is the owner's equivalent rent, which is a dumb thing. The rent you
It
charge
is, yeah.
yourself to rent your house from yourself, which you would never
Super
do.
lagging. Yeah.
Just a total. So I just don't believe there's ever been any inflation because there was a step function change in global supply and demand by this authoritarian lockdown nonsense.
Yes, and in places like China where there were, very rigid lockdowns and no fiscal stimulus, there wasn't a huge demand boom. But in America, where there was a lot of fiscal stimulus, and we have this, very consumer culture, everyone's ordering stuff on Amazon, and no one's working, or very few people working.
Amen.
Suddenly, there's not enough stuff. So there's a supply.
Amen.
Now then we started hearing about supply chain issues. Now everyone wants to ship. Oh, so shipping rates explode higher, and then
Yeah.
everyone over orders in 2022. Now there's too much stuff.
Yeah. Look, and here's the one thing. I used to be in the camp that recession, that we're in recession, we're going to be in a recession. This last trip, no way. There's
Yeah.
no global recession. Planes were full, hotels were full, restaurants were full, prices were high, people were well dressed, everybody was happy. So I'm basically of the belief that we are in kind of this Goldilocks world where they're devaluing the currency at a rate. It's like boiling the frog, right? If you do it too fast, the whole experiment, you kill the frog. If you don't do it fast enough, the frog jumps out. So they actually are doing it at the right speed.
Yes, we got to talk about the economy and just how well the economy has performed relative to expectations. I think now there definitely were some soft landing people and some very optimistic people. So and they deserve a ton of credit. But it was a mainstream view 9 months ago that the U.S. was heading to a recession. I remember literally Bloomberg had a recession odds probability, and it was 99%. So it's not like it was only the doomsayers who were.
And one of the guys on that panel, actually, it was this morning. He said this. He said, how did he phrase it? You just won't feel it. That we're in it, but you won't feel it. So it won't be your normal. I'm like, no, okay, you're either in or you're out, right? It's a binary. It's a 1-0. You're either in recession or you're not. But it's interesting that there's so many people. And again, I was in the camp, right? I looked at the data and I said everything except employment is down, Employment, I believe, is totally manufactured by the birth-death ratio and that nonsense.
And
And so
lagging.
we're in recession. And yet, everywhere you look, things continue to rock along. And I think that's because the expansion of credit, right? Credit card debt went crazy, consumer debt went crazy, corporate debt went crazy, government debt went crazy. And so ultimately, but the one thing that's not working in
Yeah.
this whole thing is gold, right?
Well, the gold doesn't do well when there's a good economy, right? It needs like stagflation.
Exactly.
Yeah.
No, exactly. No, and that's the thing is, for all of this other stuff, we probably just should have been looking at gold. Now, the problem with gold is it really being spoofed, and that's why it's flat. But to your point, it should be, as Chris Wood says from CLSA, right, $3,500, but it's not. And what I think is interesting, back to crypto, everybody's like, crypto hasn't been a good inflation hedge. Like, are you joking? If you go back to 2020, the price was like $8,000, right? And then we doubled the money supply. No, it's $10,000. We doubled the money supply. And therefore, just doing Bitcoin per dollar. One Bitcoin is one Bitcoin. We don't buy it. We don't price it in Bitcoin, price it in dollars. So in dollars, it should have gone up 100%. It did. It went to 20. People say, oh, but it went to 15. Like, who cares? It went to 20 and now it's 30 again. And so what is that?
By way of 65.
Yeah, by way of 65. But the 65 was leverage, right? That was, and that's what happens to every asset, right? It's what's happening to stocks right now. Why are stocks up so much? Because
Great
the
question.
multiple
I was going to ask you.
Well, no, the multiple expanded. Why did the multiple expand? Because margin debt expanded again. So last year in the depths, we started to pay down leverage. The problem is we only paid it. So we hit this spike in margin debt that we'd never seen. Now people say, oh, on a percentage of market cap, it wasn't as high. Okay, it was close, but it was near the all-time record.
That was what, 2021?
2021. And then it started to go down in 2022. And that was good. And the market went down like it was supposed to. But then it stopped going down in November because of the pivot. Like, well, what pivot? They're still raising rates. There was no pivot.
And they're still shrinking their balance sheet.
They're still doing, there was never a pivot. But the media machine, like the jawboning and the speeches, it's amazing. I mean, it's literally like, we need the little kid. The king's naked. Ugh. But no one's willing to say that. And so all that happened. And so this year, we're having just one of the greatest short covering rallies in history. I mean, NVIDIA is like the greatest poster child for it. I mean, NVIDIA is the Tesla of 3 years ago, right? Everyone was sure Tesla was going to go down and go bust, and they came pretty close. And they probably lied about some stuff, but they didn't, and had one of the great short squeezes of all time, right? And the whole shorts thing with Elon. This NVIDIA short squeeze is bigger, and the data in Q1 and Q2 was the biggest number of short covering, again, in history. And anytime you can say in history, it's a big deal, right? Because we have a long history, and well, short relative to Europe,
as you know, from Spain and Portugal.
Yeah, Spain and Portugal, a lot. I was super long. But I think what's interesting now is Bitcoin is, I believe, in crypto summer, right? I think crypto summer started June 15th. Now, how bizarre. And I don't think anyone was paying attention to me, so that's not my point, but I thought it was bizarre. A few months ago, I said June 15th was the equinox. That's the day that Blackrock announces their ETF. I mean, that's just total happenstance. Again, I had nothing to do with it. But I just thought it was total. And that is literally the low in this, because there was a correction that was going on after the big rally from November. And that was the low. And so now we're in this, and summer is not parabolic, right? That's fall. So they're the four
Grind
seasons,
higher.
summer,
You
winter,
think
fall.
grind higher.
Yeah. And so we grind higher. So we have higher lows and higher highs. And we head towards fair value. We've had Tim Peterson on the show, and Tim's awesome. And he has this Metcalfe's Law model. And, at the trough in the bear market, okay, last year, the fair value of Bitcoin got pretty low. It got down into the mid 20s. Today, same model saying we're back in the 50s. And so I think we grind toward 50 by the halving, then we go parabolic. But the caveat is there's not as much leverage this time. So I don't, last time the fair value was 20, we got to 60, 3 times. That
Mhm.
probably isn't going to happen this time. This time, if fair value is 50, could we get 3 times above that? I don't think so. Could we get 2 times? Sure, for sure. And then you drop back to fair value and probably go below fair value in the next crypto winter. But here's the thing that I think is interesting. If you look at all the halvings, we basically 10x, and this fits the Metcalfe's Law curve. We basically 10x the total market cap. Basically, we add a zero. So from 100 to 1,000, 1,000 to 10,000. This will be 100,000, and then the next one in 2028 is 1,000,000. And that's just stupid. How can you even say that? I'm like, well, it's just math. I mean, it's literally.
I could see 100,000, but forgive me. I do have a hard time with Bitcoin at $1 million. I do have.
I
a hard
know,
time.
but it's just because we're just not good at math, right? That's a 10x. That's the same move as 1,000 to 10,000 and 10,000 to 100,000, right?
But Mark, to your earlier point about from 2009 to 2015, no one in traditional finance cared about crypto, and there was room for it to 10x. If your market cap goes from 10 million to 100 million, it can go from 100 million to a billion. But if it keeps this law of tens continues, pretty soon, like it's going to have to become the broad economy.
If it 10x'd forever, true.
Yeah.
But think about it. So have you read Snow Crash?
No, I haven't. But
Okay. No,
Jason and Mike are big fans of it.
Look, you have to read this. The dude predicted everything that's happening with the metaverse. But in it, he talks about the $1 trillion not being worth anything. And this is the dystopian future. And you're just like, oh my God. So yes, a 10x doesn't seem possible if the dollar were to stay the same.
Mhm.
But if we hyperinflate or hyper devalue.
But in that world where you hyper devalue, a plane ticket costs $250,000, right? So you have to have huge inflation.
Yeah. No, exactly.
Yeah.
And again, I'm not saying that that's going to happen, but I come back to $1 million coin is roughly 10 trillion of market cap. And that to me is not unfeasible. Now, the 250 number, I'm sorry, the 500 number is the number I'm very comfortable with because that is the monetary value of gold. No, I'm sorry. No, I have this wrong. 500,000 is 10 trillion. 250 is.
Okay.
Yeah. And it'd be 20 trillion. 20 trillion is a big number. 10 trillion is the value of gold, give or take, above ground. Some say it's 11, but let's just round it to 10. That doesn't count because half of it is chalices and, jewelry. But the monetary, this the base layer of money in all the central banks around the world, that's 5 trillion. Bitcoin's going to take that. I mean, I'm as certain of that as I am that the sun's going to rise tomorrow.
Take that from gold, so gold goes down in value?
No, that one's tougher for me. I do think that the central banks move, but I don't know that they sell the gold. I don't know. I think maybe what happens is they devalue their currency, so they print the fiat to buy the Bitcoin to go with the gold. So you have both. But I could make the case that gold does go down. I could, but Peter Schiff would be mad at me, and I don't want to make Peter mad. But I think if if what I believe, which is money, right? There's only one money in the world, gold. And money is an asset that exists in the absence of a liability. And everything builds on top of that. So we have Fedwire, ACH, Visa, MasterCard. The debt system sits on top of the money system. If gold gets displaced physically or spiritually by Bitcoin, and Bitcoin takes that $5 trillion layer, and then we build Lightning and L3 and L4 and stuff on top of that. That's the digital future. And in Snow Crash, they have this, right? There's no physical money. It's all digital and it's all in the metaverse. And the crazy part is they talk about goggling.
Hmm.
And when they describe the goggles, it's the Apple thing that just got announced.
Oh yeah, that's
I
cool.
mean, the same thing, like the way they describe how it looks and how you can make it clear or make it go fully in. So you're in the, it's like, holy shit, this is bizarre. And then it's little stuff like the protagonist of the story. His name is Hero. And we have the Hero wallet for ordinals. And there's a whole bunch of words like that have found their way into the crypto ecosystem. And this book was written a long time ago. So it's all just very interesting. And you got a nod to the Knights Templar and a whole bunch of other stuff. But it's a great book. But my point there is, how do you get to the $1 million number? Well, we migrate from just the base layer to the replacement of the debt system money in a reverse Gresham's law way. And the guy you should interview Murray Stahl.
Oh,
he's
he's
for your
great.
other show. Because Murray articulates this better than I do. And it's funny. I would say Murray makes me look bearish.
Really? Wow.
Oh my God. Oh
Murray,
no,
yeah.
no. Look, I'm a bullish guy, right? And I love Bitcoin. You got my sign. I mean,
Yep.
I love it. He makes me seem bearish because he's like, Mark, 86 trillion global monetary system is all going to Bitcoin, all of it. And here's why. And he lays it out and look, he's even older than me, right? And it's not that old is better. It's just, we actually have some knowledge and some wisdom, hopefully.
Yeah, and he's, by the way, a very in-depth researcher on all sorts of things in
Oh,
finance. As a very well accomplished
absolute.
investment
He's a
firm.
mad
So
genius. And
I knew he was like Bitcoin open. I didn't know that he was such a even more bullish than you.
he's one of the largest miners in the country. He has a mining fund that he raised like 10 years ago, long before anybody else. What I love, he did this is amazing. In the last bear market, he bought all the machines from the defunct miners
I remember reading those articles about how
and
no, that
pieced
was a
them
bear
out.
case for Nvidia that crypto miners don't want to buy the
Right.
rigs.
And he pieced them out. He broke them up into pieces. And now he uses those pieces to keep his machines at a higher on percentage. I mean, the guy's a mad genius. But he also has crypto fund, Bitcoin fund. He invests in things like, MicroStrategy. So he's a value guy, right? This is a guy who built a $6 billion asset management firm around value. And he, like Bill Miller, and it's interesting. There's this group of us, I call us the OMGs, right? The old macro guys. And it's, Burbank and Moorhead and Novo and there's and these guys, Murray and if I mean there's a handful and Bill Miller and look, most of those guys are way more successful than I'll ever be, but that's not the point. We're old and we came around, right? We were shown this idea and most of us were skeptical at first. Not all of us. Dan was less skeptical, cost me money, but I was skeptical. But when you did the work, like Bill says, he did even just a little analysis. He's like, oh my God, this is Amazon. And most people don't know this. There are only 5 people in the world that bought, and there's probably more than 5, but I joke there's 5 that bought the Amazon IPO on the day 27 years ago and still hold it. Jeff, mom, dad, ex-wife, and Bill Miller. Bill Miller's cost of Amazon shares, I love this, is 7 cents. That's his cost. And he's never sold a share. And he's never sold any of his Bitcoin that he's accumulated. And his son is partly responsible. Bill the fourth is definitely all in. But old Bill, like me, he's there because he views value the way Murray does, which is value isn't just low price to book and low PE. Value is the current price lower than the future wealth and value that's created by the business or the entity or the asset. And so, but all of that comes back to BlackRock, right? BlackRock is $9.4 trillion for a reason, right?
And counting.
And counting. They're the top of the all-seeing eye.
Yep.
They're top of the pyramid. And Jamie and JP Morgan. Did you watch the show? It's another like Yellowstone. I see you're going to notice this trend. I watch all these things with big body counts. Mr. Robot.
No, but I've seen some clips.
Oh my God!
On
You
YouTube.
have to watch this, Jack.
Yeah.
You have to watch. This is a series. I think it was like
Yeah.
Netflix. No, it wasn't Netflix. It was like TNT.
Yeah.
Holy crap. The guy who played Freddie Mercury in Bohemian Rhapsody. I mean, amazing.
He's a hacker and he gets to delete the debt of all.
And in it, there is this thing called Evil Corp, which is definitely JP Morgan, and Evil Coin, which is definitely JP Morgan coin. But they talk about Bitcoin and he's a programmer.
What's JP Morgan coin? Is that the dollar or is that the blockchain product that they're working on?
That's the blockchain product. But ultimately, becomes CBDC, the dollar. But in the show, they talk about all this stuff and you're just like, oh, and again, this was in 2015, 16. This was not, ex post. This was right while it was going on. I would say if I had watched it in real time instead of watching it last year, I'd be a lot richer. But it's still worth watching. The only problem is the gratuitous violence and the gratuitous drug stuff is a little much sometimes. You got to fast forward. But
we appreciate the the advisory for people who want to avoid that. So my question is for you: in this world where people are adopting a lot more crypto, what does economic growth look like relative to now? The big banks today, JP Morgan, Wells Fargo, Citibank reported their earnings, and a lot of people are borrowing a lot more on their credit card.
Yeah.
And bank earnings are going up because they're not taking as many loan losses as people thought. And they get to just higher rates. They get
and NIMs are higher. Net interest margins are higher. They're still not paying depositors anything, and they're making more on their bond portfolios. And look, here's my big pet peeve, and this makes the maxis all mad. They're all like, not your keys, not your coins, get off the exchanges and put your things on a ledger and that's it. Which, fine, I'm happy I own a piece of Ledger. Now I own a piece of Coinbase too, and Coinbase is kicking ass.
It is kicking ass.
Kicking ass and taking names, and I'm so happy for those guys. I'm happy for me too.
And it's a very shorted stock, and it's not good when you're short a stock that's going up 25%.
No, they're kicking ass. But the point is, if the only role of Bitcoin is to sit on a thumb drive and you bury it in your backyard, we can all go home. We don't need that. We have gold. That's not what we need.
I agree.
If the goal, as you describe, and your question is so insightful, and my big thing is questions are more important than answers. I'm Mr. Guy. I'm supposed to give the answers, and that's not important. What's important is the questions. And your question is the question that everyone needs to be asking, because in a world where we have a deflationary asset instead of an inflationary asset, wait a second. If everyone's hoarding and hodling, growth will slow.
No one's spending money.
Here's the thing. The Knights Templar, we owe them a debt of gratitude, because before they came along, we had crappy growth. It wasn't horrible, but it was slow and it was crappy and it was hard. And post that, we've had the greatest boom over the last 1,000 years in human history because of fractional reserve banking. Oh, no, fractional reserve banking is evil. No. And I put this challenge out there to everyone all the time. Name a country without a fractional reserve banking or with a poorly functioning fractional that you would live in. I'll wait.
Yeah.
Because no one's going to find it. Because what fractional reserve banking does is it multiplies the impact of the wealth that's created.
And by the way,
through
just for people, this is
rehypothecation.
not an AI deep fake of make a video of Mark Yusko saying that fractional reserve banking isn't evil.
No,
This is
no, this
real.
is
This is real.
real.
Yeah.
This is real because without fractional reserve banking, without rehypothecation, you have stagnant growth, and the wealth then concentrates in the
Yeah.
hoarders.
If
And we
all I own is Bitcoin and I know that it's going to $1 million. I don't just think like you think that it's going to 500,000. I know it's going to 500,000. When I go to Starbucks, am I going to buy Bitcoin, buy Starbucks with Bitcoin in
no,
an asset
no,
that's going to be worth
no, no,
$500,000? No.
no, no. And because what we want is Bitcoin to be the base layer of money. And then on top of that, we do what we do, which is we lend it, we borrow against it, we swap it, we rehypothecate it, we do the things that banking does. Because again, banking is not the problem. It's like when they call FTX, it was a
Mhm.
crypto problem. No, it wasn't.
By the way, I still don't know what FTX stands for.
I don't either. That's a good point. I can come up with a good one though. But um, fucking thieves, right? But it's it's not that that was a crypto problem. Crypto didn't fail. DeFi didn't fail. That was a bad people doing bad things.
And an unregulated thing. Like if JP Morgan was
Definitely
doing that,
unregulated.
the SEC would be on them in a day.
Oh yeah, no,
But
that's a
they're in the
very good.
Bahamas, so they're kind
No,
of
it's
just
a very good point.
making sandcastles.
And look, if you believe as I do that it was all part of a grander plan, great. Um, some people don't like that, but I can point to too many coincidences. Like it's just a weird coincidence. Like I said, that you know Sam's dad is an expert on the trust law that he used to try to take over these companies that he lied to. And it's the old adage, right? If you borrow $1,000, you got a banker. If you borrow $1 million, you got a partner. When Luna crashed, and Alameda was done, you got two choices. You can fess up, go to jail, or you can try to buy the bank. So then you don't have to pay back the loan. Because guess
Yeah.
what? You can prioritize who pays back the loans. So they tried to buy Celsius. And they're like, shit, no, it's bad. Hole's too big, out. Buy Voyager. So they buy Voyager. Didn't
Because
work out. They had
this
to
is
unwind it.
complex, and but when this is reported that they would buy Voyager, it was not like they said, "Oh, the reason we're buying Voyager is for this reason." So, but the reason is because FTX owed a lot of money to Voyager.
Exactly.
Yeah, so FTX wanted to buy Voyager, and to sort of nullify that debt, and also
100%. And I have inside baseball, not inside information, but I have inside baseball on the BlockFi part of that equation. And here's the thing. I'm now at the mercy of a judge, which many people are in this business right now, that I will argue that because there was fraudulent conveyance of this rescue package to BlockFi by FTX, that they actually didn't have the money they said, the option that they had to buy BlockFi should be null and void. And if that is the case, then us preferred shareholders will have some value to recover. But we need the judge to rule that. So if he or she is listening, I would appreciate that very much, because that's the right thing to do, because there was fraudulent conveyance. There's no question.
I'm not a lawyer, but there was fraudulent something.
Yeah, yeah. I said I'm not a lawyer and I don't play one on TV, and I didn't stay at a Holiday Inn Express last night. But you don't have to be really smart to know there was fraud there. But I think your point. What will growth look like in a world where, look, moving away from globalism to nationalism reduces growth?
Mm-hmm.
Full stop. Okay, moving to a world of less rehypothecation and less fractional reserve lending. Now, there's a point, there is an inflection point where too much leverage, the whole system crashes. So we don't want that. And we do want rules, and the banking rules have been actually pretty good for, hundreds of years. So
Yeah, but unregulated, 2008, it can have a really boom bust cycle. And so
but that was the lack of regulation, right?
Yeah.
They weren't enforcing against Lehman and others. I mean, Lehman was 40 times levered. You're supposed to be 12.
Yeah.
And Deutsche Bank, arguably was 60 and it's still probably in the 30s and it needs to be 12. But most of the banks weren't doing really bad stuff. It was just a small handful of those investment banks that then got nationalized um, and look, there was more than rehypothecation in global financial crisis. There
Mhm.
was the fraud around subprime and making loans that people couldn't fog a mirror, literally. Like,
Securitization,
yeah. And look,
reliance on like unstable funding structures.
I mean, look, if you take a bunch of garbage and slice it up and say, well, the least garbage stuff is valuable. Okay, that's fine. And we'll rate that AAA. Well,
Mhm.
it's not AAA, but it's not garbage. And then to say that the top of the stack, the equity is viable, and then I can borrow against that
And put that into a whole nother structure,
and
yeah.
put that into a whole nother structure and do it again, CDO squared. So that was, I think, a lack of oversight. But it's what happens when we've all watched Billions. They're all friends, right? These are all your friends who get the Secretary of the Treasury job and and they all happen to work for the same firm. That's the weird part.
Goldman.
In a past life, I'm not going to name names, but they all do happen to work for the same firm, as do all the central bankers and most of the large asset managers.
Sorry to interrupt. Wanted to let you know about Blockworks' upcoming crypto event, Permissionless 2. This ultimate DeFi gathering will be taking place in Austin on the 11th to the 13th of September 2023. It will feature the very best discussions on ZK tech, rollups, account abstraction, MEV, and much, much more. All the big hitters in crypto are going to be there, so if you're into crypto, you need to be there too. To get a 20% discount to a full 3-day pass to Permissionless 2, click the link in the description and use code GUIDANCE20. That's GUIDANCE20. Thanks, and let's get back to the episode.
What I get so excited about with digital and particularly with Bitcoin is it's the sum of technological innovation over 7 decades. So it's not like an overnight. It's like when people say AI, it's brand new.
Yeah.
It's like 60 years old. It's not new. And Bitcoin is the evolution of a lot of people. And when Tim May wrote the Crypto Anarchist Manifesto in 1988, again, like Snow Crash, he laid out everything that was going to happen over the next 30 years. I mean, literally in that document, which is not a very long document, he talked about everything that was going to happen, how the state was going to fight back, but the problem is, I joke, no one cared about it for 20 years until Satoshi came along, because Tim was a anarchist and he lived up in the mountains by himself.
Mhm.
And I would joke, had no friends. I mean, he had friends, but he didn't influence a lot of people, and there was no social media. And so when Satoshi came along, he, she, they solved a very hard problem: the double spending of money, digital money. Because look, if I can just make a copy of money on my phone and send it to you, that sucks for the government, sucks for you, because I'm sending you, a fake asset. But Bitcoin is unbelievable because of that third ledger. No more me influencing the Medicis to steal money from you. I lent you 100. The ledger says it's 100. It's permanent. It's immutable. It can't change. I can't change it. You can't change it. And the best part, it can be with a smart contracts to execute. I have this bad reputation. I bet people stuff and, football games and that kind of stuff. And we always bet the same thing: steak dinner.
Mhm.
And we never collect, because, we forget or whatever. Like, if you have a smart contract, money goes to your account right away. So that's an improvement.
What about like people who copy Bitcoin, or like they copy and
Yeah.
paste the code of Bitcoin and say,
Yeah.
"Oh, I've got Bitcoin too."
Yeah. Litecoin,
Yeah.
others. Um, a couple things. One, we know the longest chain wins. But it's really more about custom and precedent, right? Why is the dollar
Mhm.
valuable? There's no backing. There's no gold behind it, no silver behind it, no full faith and credit. No, you don't get tax revenues. You get nothing. It only has value because you and I have belief in custom that if I give you a green piece of paper or a bunch of ones and zeros in your bank account, that you can use it to acquire some good or service. And it's, Paul Romer won the Nobel Prize for this 4 or 5 years ago. It's called the law of increasing returns. And it says that the best technology is not the technology. I mean, the winning technology is not the best technology.
Mm.
It's the technology that gets critical mass first. And we got lots of examples from Betamax and VHS to, any number of social media and things like that. It's not that Facebook was necessarily better than MySpace. Arguably, MySpace had some features that were better, but Facebook went viral because they had a
Yeah.
genius.
The system does not maximize for enjoyment or what is the best experience. It's what's the most viral,
Yeah, what's most viral. And the more people that use a certain asset, and that's why the miracle, and I said this, I think I wrote a piece on like who is Satoshi Nakamoto in 2016 or 17. I can't remember when I wrote it. And I did a bunch of research, and my favorite one was if you Google Satoshi Nakamoto, one of the things that comes up is Intelligence Central, because Nakamoto is the surname of people from the central provinces of Japan, and Satoshi means intelligence. And I'm like, holy crap, that's way close to CIA. So I went down that rabbit hole, and to the point, I talked to Scott Stornetta, who is the guy who's cited 3 times in the footnotes. He invented SHA-256 with his partner. I mean, he's the father of blockchain, and they're a venture partner of ours. And I said, Scott, I worry about this. What do you think? Could there be a back door? Like if I were a failing state, I would create something to get everybody to exchange money for this new thing, and then I would steal it all at the back door. And he went, no. Like, what do you mean no? How did you do it that fast? He says, well, I see your point, and it's a good idea, but it's impossible. Blockchain is air gapped. I was just like, okay. And if you're telling me it's not, he says, now Ethereum, that could happen, but Bitcoin can't happen. And so, but my point there is that Satoshi came along and created this thing that solved the double spend. And in so doing, and what the hell is his name? Eric Schmidt said this. He said, and Eric knows a thing or two about tech, right? Former CEO of Google. He said, Satoshi's creation of Bitcoin is big. But what's really big is the ability to create a unique asset in the digital space. A lot of companies will be built on that. And that is a very profound statement. And I believe everything in the world, every stock, every bond, every currency, every commodity, every piece of art, every case of wine, every collectible car, every private business, every piece of everything will eventually be tokens on ledgers and
so everything will be token on ledgers, stocks, bonds, all these things are securities. So it will have to be regulated by the SEC, and that will actually be a good thing.
Yeah.
Yes or no?
No, regulation is not bad.
Yeah.
It just needs to be regulation for the right reasons. I will argue right now, regulation has been used as a weapon to slow down disruption. The same way that people tried to use regulation at the turn of the century to slow down the automobile, right? They passed the red flag law. People tired of hearing this one too, where you had to hire someone to walk in front of your car with a red flag so people didn't get hit. You never see that anymore. But they tried to pass.
I mean, FTX obviously.
Yeah.
Gemini. I mean, you're paying rewards, and you're saying you're getting it from the loans that you're making, but you're actually just paying it with your budget.
Yeah. I mean, look, bad people are going to do bad things, and that's been the case. It's called bucket shops for a reason, right? The Wolf of Wall Street is not fiction.
Yep.
Anytime money's involved, and this goes back to ancient times. Go to ancient Rome, read Roman history, and you'll find all the same scams. Not social media, but the same kind of scams, lending scams. The reason we have ridges on the quarter is because they would clip the coins because they were pure silver and you couldn't tell. And so they put ridges on it. So if you didn't have ridges, then you knew the coin had been clipped. And so the same scams by the same bad people. Bad people are going to do bad things, but they're the minority, thankfully. And we get through it, but for some reason people act like it's new. And then they attribute the bad stuff to the tech instead of the people. That's the mistake.
It's true. Mark, we got to, in a closing moments, we got to talk just about the economy. Earlier, you referenced that you think we, are not in a recession. Do you think that we will avoid a recession? Like, where are we in this economic cycle? If we're not at the, the middle or the end going into a
Yeah.
recession, are we at the beginning? I mean, what is, you
Yeah.
think
So I'm
the
I'm
outlook
going
will
to
be?
argue. I'm going to argue that we did have, past tense, a recession.
Hmm.
Right? Q1, Q2 of 22, negative GDP back to back was a recession. Now, it was a 2001-esque recession. I think total GDP last year was 0.9, which is almost exactly the same as 2001, which
Hmm.
was a recession. Now,
Adjusted for inflation. So nominally, everything is
yeah,
insanely hot. But
yeah,
if once you adjust for inflation,
yeah.
it was, yeah.
And real is what matters, right?
Mhm.
And
Yeah.
so what but the reason they didn't want to call it a recession was because there's, four things they look at. Three of them said recession, but employment didn't. It's because they fudged the employment numbers. I mean, and I don't mean like fudge them intentionally to get around calling the recession. It's just the birth death ratio is a bad system. It's been a bad system for years. Why they don't change it? We know, right, with certainty, because we got computers that tell us who gets paid, how much they get paid, when they get paid. We know what employment is. But yet we still use this antiquated system of saying, well, we're 36 months into an economic expansion. Therefore, this many companies should be formed and this many should die. And but that all goes away in a ZERP world because the incentives are wrong. When we had negative interest rates,
Mhm.
there was really bizarre stuff going on.
Yeah, I haven't looked into that, but I should. I've been hearing. I mean, if it's half as crazy as I've been hearing, yeah.
Three-quarters of the jobs, were mythical, and that's fine. Um, and the other one is this whole nonsense that the administration is trying to say, oh, they're the greatest job creation president in history. Are you joking? You locked the world down, not they, but the world
Yeah,
locked down, and people stopped working, and then they go back to work. That's not job creation. That's
yeah, but it's base effects. I mean, it's yeah,
It's basically, but it's the same fallacy of hurricanes. When a hurricane destroys Florida, they don't ding the GDP. When they rebuild, they add to the GDP. That's ridiculous. But we've always done it that way. In fact, retail sales don't adjust for population growth.
I didn't
What do
know
you
that.
mean you don't adjust for population growth? Of course you have to. We don't, and we're not going to change. Like, well, why? It's just this, and they have a footnote that says this is not adjusted for population growth, but that's silly. Now, maybe population growth isn't as fast as it was because of immigration laws, but there's still population growth. And the idea, or gas prices, right? So much of retail spending is gasoline. So if gas prices double, that's really not growth. I mean, you're paying more for the same gas. I don't know.
But it will crimp expenditure in other parts of the economy, and I
For
think
sure.
I was very resistant to this 2022 recession case, 2 net consecutive quarters, but I mean, I think that you definitely could be right. I mean, we did have 2 consecutive quarters of real inflation-adjusted GDP growth, Q1 and in Q2, and that's because the price of oil went to $120 and the price of gas went to $7. And
Yeah.
if you have a huge price shock, consumers are going to spend less in other sectors of the economy. So you had
Yeah.
a recession or a slowdown, definitely a slowdown, whether we want to call it a recession, it was definitely a slowdown. And then as inflation has fallen, because the price of oil is now, $70, that's really good for consumer sentiment.
Of course. And look, why people are so reticent to call a recession? It's like recessions are not bad. In fact, I will argue recessions are really good. And people say, "Oh, that's horrible. People lose their jobs." I'm like,
They didn't last
not
year.
all. Look,
Yeah.
not all companies should exist, right? Not all companies are good. Just fact. And keeping bad companies alive isn't actually good for society. It's just not. And here's why I say we're coming out of recession. the number of people who lost jobs, fired, you know, downsized, whatever you want to call it, huge. That's happened in every recession in history. And then what happens? You get massive opportunity in venture capital. I have never been more busy as a venture capitalist, ever. And it's just like 2009, just like 2001. And those vintages are by far the best. Right? 2021 vintage is going to be a horrible vintage. Why? Keith Rabois summed it up. He said, yes, we've all lost our minds and valuations are too high, but you go first. You skip this hot deal by saying the valuation's wrong. And
yeah,
no
and you don't want the bubble to continue. And
No,
then your
and
clients are like, why didn't you get into this? Why didn't you buy Uber at $100 billion?
Absolutely. And everybody did. And they all justify it by saying, well, they did. You know, and look, there's no explanation for the valuation that FTX got at 36 billion. None. Zero. No explanation. But people did it. And why? Because other people were doing it. And it was just, it's that emperor has no clothes. But now we're at a place where we're seeing people who were laid off and they're starting businesses. And it turns out they're really good. And I like to tell this one story and then we'll go. But back in 01, we backed this company, and it's an amazing story. They got laid off in the recession, and I'm not even before one. This was in the 94 recession, 94, 95. And they got laid off. And he said, can I take my project? And I'm like, yeah, whatever. We don't even know what dense wave multiplexing is. And he went all over Silicon Valley. No one would back him because he had an idea that if you shine light through a fiber optic cable, it takes X data. He said, I'm going to shine it through a prism, break it into 8 colors. You get 8 times more capacity. Like, that'll never work. Turns out it works to 256X. So you can increase fiber optic capacity. A company called Sienna. My favorite part of the story is his 3rd grade teacher, retired, gave him her life savings, $300,000. Bad decision, actually, but turned out really nicely. Turned into $300 million.
Wow.
And it became a world beater company. And that was amazing. But in the teeth of the recession, he got laid off, but he wanted to feed his family. So he said, I like this project. I'm going to do this. And that's what's happening right now. And that is a sign of early expansion, not contraction. So that was kind of the last straw for me to say, I was wrong. And, it's okay.
But spending doesn't, if someone gets laid off, in the short term, spending goes down.
For sure.
Yeah.
No,
but in the long term, you're absolutely right. Yeah.
That's the nadir. And that is the nadir. And that's why I say, I think we're past the nadir. And now what we're seeing is these people are re-engaging and really cool stuff is being started. And I just talked to one this morning and really cool little company. And we'll see what it looks like in a couple of years.
Nice. Well, Mark, thanks for letting me join you and stuff, and thanks for being optimistic. I like how you leave Sinister Saturdays for when Mike's here.
That's right. No, look, Sinister Saturday for me is just a portion, right? There's always got to be something, because the world has a sinister element, right? I mean, we all know.
There's no doubt about that. Yeah, no one would debate that.
But optimism is way better.
I agree.
It was funny. Last week I did this from Lisbon, and Mike called me his sunny co-host. One, because I'd been outside and I was sunburned, but also because he said, you're so cheerful today. I said, well, one, I'm rested, right? A 2-week vacation, hadn't done it in 19 years. Now I'm gonna do it more often. It was amazing.
First vacation in 19 years.
Pardon?
First vacation in 19 years?
No. The first 2 weeks back to back.
Yeah.
I mean, I take vacation all the time, but it was a day here, a day there, 5 days. But I hadn't done a full 2-weeker. There's something about that duration.
I agree with you.
That you get fully rested.
Mm-hmm.
And so I was just raring to go, and I was and I was in a really cool place, and I just learned about the Knights Templar, and I was like buzzing. I do think that optimism matters, and I appreciate the point. But we do have to remember the sinister forces that we have to deal with. And look, I have nothing but admiration and respect for Blackrock and Larry and all those guys. I also have nothing but fear of what it means for the incumbents to get a toehold in what should be run by the disruptors.
Mm.
Mostly because it impacts my bottom line as I'm trying to fund the disruptors. So I do worry a little bit about that. So it's a cautious optimism.
Well, we'll leave it there. Mark, thanks so much. And we'll be here next week with Mike. And thanks everyone for watching.
All right, thanks, Jack.